And I'm just going to speed this up. Okay, I'm just going to speed this up, and you'll start seeing the arrows appearing. And one thing I'm going to do is I'm going to turn off the auto scroll, so we can actually scroll at a normal speed instead of it going crazy. And we will change the color so it's easier to see, from white to red. Okay, so a blue line means that the price went up, a blue candle means the price went up, a red candle means the price went down. Our system is going to be very, very simple. Okay, you will see a small arrow appear. When that small arrow appears, we are going to see what did the next candle do. Okay, so the arrow will appear, let's say, if it appears on this candle, it'll appear below this, pointing up, for example, or pointing down. And we are going to enter the trade at the open of the next candle. Okay, that way we have sufficient warning. That way you can tell, oh, this is cool, because it's telling us beforehand that you need to enter. It's not telling us later that you should enter. And you will see that once an arrow appears, it will never disappear. Okay?
That's amazing. So it'll never repaint then. The second the arrow's there, it's there, and you can be confident to take the next
trade.
Trade.
You can be confident, and if it's a loss, the arrow will still stay there. It'll just tell you that it was a loss. And that's it. And you just live with it. I mean, how do you test something when it will never tell you that you lost? Right? So I'm going to speed this up. You can see how fast this actually goes. And here's an example. You see this arrow appeared right below this. You see that the next candle was red. It was not a blue candle, and that would be a losing trade. Okay? So that's just an example of what a losing trade would look like. So we would have entered, and 30 minutes later, we would have actually lost that trade. Okay? So here we see an arrow pointing down, right?
Yep.
And that's basically what we're checking for. We're checking for, does an arrow point down, does an arrow go up, and what was the result? In this case, you can see it's slightly red, but we'll call it a tie. Okay, we won't actually consider that a win. So we're going to keep going and just look at these. So this one is arrow pointing down. The next candle goes down, so we won this trade. Right? We would have entered the trade at this price.
Right.
And the trade would have ended at this price 30 minutes later. So you would have 30 minutes to make sure that you got this entry price. Now you will notice that the price on this candle, I'll zoom in a little bit, the price on this candle actually went up before it went down. That's what this little wick on top means. It means the price actually went up before it came back down. That means you would have had time to actually get even a better position than the signal that we issued. Okay, because we would have issued the signal saying that this right here is the price that you need to enter on.
Right.
And you had all of this space to enter that trade. So you had plenty of time, and you had 30 minutes for that trade to be over. And in this case, you see that we would have lost. So this is I'm showing you guys evidence that this system does not repaint at all. If it's a loss, it'll just say it's a loss, and you accommodate for that, and you move on and you continue testing. Okay, so here again you see this, and you see all of these, and here's what our system then starts doing. So this system generates these signals for us, then it sends them to our web-based system. Our web-based system applies a new filter on it that tests against market news, that tests against a few other fundamental factors, that tests against market opens and closes, and that's one of the things that it does. So in this case, for example, if there was a market event over here, which it looks like it was, then our system would have actually prevented you from entering these trades. It would have actually warned you that there's stuff going on, and it would have never shown the signals on the site. Okay, but we'll actually ignore even that, and we'll just say, let's take every trade that comes up. We'll just take every single trade that comes up. We don't care if there's news in the market. We don't care what's going on. And let's just say that we'll start counting it from, I'll fast forward to January, just so we're not spending like 3 hours going through this. Okay, so we will start here, January, and we will go from here. Okay, so here is the day the market opens, 2nd of January, and let's see. So here is our first signal. Okay, it says the next candle should go up. The next candle does go up. That's a win. This one says next candle should go up. It goes up. That's a win. Let's keep going. This one says the next candle should go up. It does. We win again. This one says the next candle will go down. It goes down. We win again. This one says the next candle will go down. We lost that one. Okay, are you guys counting this?
Yeah, I think we're 4-1 right now.
Okay, 4-1. Okay, this one we'll say it was either a tie. We can count it a loss. Either way is fine. This one is the same. It's either officially this would be a tie most likely, or it would be a slight win because you could have entered any of these places. But let's just count these two as losses too. Okay, so we are 4-3 now. Okay, we are 4-4. This is a blue going up right here. Can you guys see that?
Yep.
Okay. Yep. So we got 5-4 so far. We got 6-5 here. And here is another one that's a win. So 7-5, 8-6. We lost 1-1-1. We lost this one, won this one. So 9-7.
Yep.
Okay. Here is 10-7. Here is 10-8. And here is 11-8, 11-9. Then another win, another win, another win, a loss. So you guys can keep count, but as you can probably already guess, this is not a currency pair that we would be issuing 30-minute time frame signals on for this particular thing, because our criteria is at least a 62% win rate over our backtest. So if we repeated the same backtest, okay, now let's say we'll do it over 15 minutes and we'll run same time frame. Okay, let's get our candlestick on there. Let's get our system on there, and we will start fast forwarding. Turn off this auto scroll. We'll make a bull candle green this time, so it's actually easier to understand. Okay, so let's go ahead. We'll begin this time, okay?
Mm-hmm.
Here we are on the 2nd of January. Okay, so arrow pointing up, okay, and that goes up. So next candle is green, we win that. Okay, here's 2, 3, 4, 5, 6, 6-1, 7, 8, 8-3,
mm-hmm.
9, 10-3. That squeaky noise is actually the backtest when it's over. I guess the MT4 developers think it's funny, but 10, 11. I think this was the 11th one. So 11-4, loss. So we have 11-6. Then we have a win. So 13, 14, 15, 16, and a loss. So 16-5 so far. $16.6, 17, 18, 19, and 20, 21, 22. We're still at 6.
Yeah. 23.
23-7, 23-8. 24, 25, 26, 27, and then a loss. So 27-9, 28, 29, 30, 31, 32, 33, 34, and a loss of 34-10.
Yep.
Yeah.
Okay, and then there's 35, then a loss, 35-11, 36. So we are at 36-11. Okay, so that basically means we won 36 out of our 47 trades.
Yeah.
That gives us a win rate of
77.
76.5.
Yeah, that's fantastic.
Yeah, but the whole reason why I want you guys to pay attention is there is no one size fits all, right? So we test every different currency pair through a back test like this, and we're actually looking for two things. We're not looking for just the win rate. We're looking for another thing called variance. And what that means is how big of streaks of losses are you getting, right? Let's say that I have a system that wins 70 out of its 100 trades, but 20 of those trades came in a streak of losses. It would have wiped out your account. It didn't matter how much money you had, right? You would lose a significant amount of money there. So when we run a back test like this and we find a currency pair where we have high success rate, but our losses are coming in long streaks, then we don't use that, because there's a risk that when we are issuing those signals, there'll be a long streak of losses like that and our user will suffer. So we don't use those. We don't use any that have a less than 62% off the bat anyway. So less than 62%, we won't use it. High variance, we won't use it. Big streaks of either direction, we won't use that. If it's a system that only issues trades on certain market news, we won't issue that either. So we have all these systems and things in place. And now, out of the 11 trades that you saw that were losses, I know for a fact that 4 of them are actually because of market news. In fact, 2 of those were on the NFP.
Right.
So, we absolutely would not have used those signals anyway. But my point is, nobody actually will typically show you something like this going on. And so what our system would have done is, at this moment in time, right here at 10th of March at 11:30, it would have issued a signal. Actually, it would have issued a signal at 11:45. It would issue a signal and say it's going to go up, enter the trade that closes at noon. So you would have entered at 11:45 and you would have exited at noon. Even if you forget about the entry price, you would have actually more than likely gotten a better entry price than just this. But you would see significantly higher win rates. In fact, one of the conditions of the system is that it cannot take more than 10 seconds into the next candle. So on a 15-minute trade, you will get the signal within the first 10 seconds of the new candle beginning to form. And that's why we can be very confident when we look at this. Now, there is an automated way to do this as well. We actually use an automated system that actually generates these summaries for us and shows us what our win rates were. So here's another example. The USD CAD pair had an exact 50% win rate. We're not going to use that on 15 minutes. We actually run a longer back test and see if maybe the results will be better somewhere else. Same for AUD USD. Here's AUD USD in slightly different settings. It did a little better. But as we keep improving those settings, we come across higher and higher win rates. GBP USD here, that's 77. Over here, different settings, we are down to 60. So we experiment with this like all the time until we come up with exactly the right criteria where we have the best chances of success, and that's what we issue. And that's why we can say, if we wanted to really be pushy about it and really market it, we could be like, oh, we have a 77% win rate. Yeah, but that doesn't mean anything, because that 77% win rate is over a long period of time, over a large number of trades. It could have been down to 50% in a certain month. So when you actually go into options domination, we are actually very clear, and we emphasize that you should be aiming for a 62% win rate across the board. Everything else on top of that is, be pleasantly surprised. Now, it has just so happened that during our trading, during all of our testing and so on, we have stayed consistently above 68, 69%. But that's not something that I want to promise anybody, because that's just the nature of trading. You see these things happen in streaks. They kind of go up and down. That's just what happens. So some weeks we have an 85% win rate, and some weeks we have a 60% win rate. But over time, it stays somewhere between 65 to 70 for these algorithmic trades. Now, there is a whole other category of trading, which is manual trading, where you have an actual physical person, a trader actually sitting there and taking trades, looking at all the market conditions, looking at all of these different factors, and combining algorithms in there. And then you have higher success rates. For example, on that one, over the last 7 months, it's been consistently above 70%. It's been actually like 71.4%. And that's like one of our traders, the Asian session trader. The same thing with the end of the day trading results. We have much higher success rates there. So that's kind of the background of what's going on here. Some of the stuff, hopefully you guys can see, we kind of know what we're talking about. We're not just people who are like, oh, this sounds exciting. Let's let's give people signals. Even if we gamble, we'll be right 50% of the time, and we might get lucky a couple of weeks, and we'll get more than 60%, and people will be happy, right? And that's unfortunately how some systems run out there. That's how they run. And the whole idea is, can I cover my bases enough? Can I delay enough? Can I put enough of a margin, even though the price is over here? Can I issue a signal for way down here and say, take this as the entry position, and when the person loses, we can claim, well, you didn't take the entry position? That's the kind of stuff that we don't do. For us, it's all about manageable, practically, are you going to see success following this stuff? And then, some of this ties in with what these people are actually doing. You will find a lot of these people will sell you an indicator, or they'll sell you signaling services, and they'll say, oh, I'll give it to you for free because I'm so generous and so charitable, and I want to give you, mercy and hope and all these wonderful things. And all you have to do is go sign up at this broker and put in $300 or $500 or $1,000, whatever. And the reason they're doing that is because the binary broker then turns around and gives them a very nice CPA commission, just like people who sell guides on how to win at roulette, right? They sell you this guide and they're like, I'll give you this guide for free. This is the best system in the world. It'll never lose. Now go to this casino and sign up. But the casino is going to give them money because the casino knows that over time you're going to lose, and the casino will win out at the end of the day. And usually it's something very silly like, oh, just keep doubling your bets until you win. And there's actually people who advocate that even in the realm of trading. They're like, oh, if you lost a trade, that's okay because you will probably win the next one, so just double your trade. And the worst part is even doubling your trade won't make you profitable because your payout is 80%, not 100%. So it's amazing to me that people get away with this. It's more amazing to me that people let these kind of things happen and they don't question that you should be a trillionaire by now, or you should be not selling this stuff for $10, $20, $100, $1,000, whatever, stuff like that. So for us, it's very much a matter of options domination is more a service than it is, just a product. We actually have trading teams. We have these algorithmic testing guys. We have a whole coding team in the background who's doing all this stuff, all to make sure that the end user doesn't have to do all of this nonsense. I mean, if you're going to do all of this stuff, you might as well go and become a trader and then come back and apply, and we'll hire you. But if you're just looking to make some money trading, and minor trading really, binary options is for really minor stuff. You're looking to make $5,000 a month, $10,000 a month. Anybody who tells you that you should join up and take all these trades and you're going to make $100,000 a month doing binary options alone is absolutely lying, because no broker is going to be okay with that unless they are regulated, unless they have some insurances in place to make sure they don't lose out. And just pure math. It's just pure math. And it's one of those things that people will ignore when it looks like easy money is laying on the table. So that's the boring stuff. That's the boring stuff that's happening in the background, and what we are doing and how our signals are coming in, where they're coming in from, and why we can predict what our success rates are across the board, and why our entry points are actually real entry points that give you plenty of time to enter. You could have entered any time during this 15 minutes. We just tell you that the expiry is for 15 minutes. If you get a better entry price than this, take it. If you get the same entry price, take it. That's totally fine by us, because we are predicting that the next candle itself is going to be a bullish candle in this case, or a bearish candle in the other cases. And that's the bottom line behind it. So Does that make sense? Does that kind of help clear the air a little bit?
That makes complete sense.
Yeah. Now you talked about, sorry, I didn't mean to cut you off there. You talked a bit about brokers. I don't know if you wanted to elaborate on sort of the brokers that you guys have aligned. I mean, you don't need to give us names, but just we were talking before about the differences between how brokers work, and just to give people some assurances on
absolutely
safe with their money and whatnot.
Yeah, well, like I mentioned, the one of the intrinsic problems with the brokerage system in binary options in general is that they operate something like a casino. And there is a difference. You will notice that no casino will ever have a problem with how much a player is winning in poker. because that player is getting the money from other players. But the moment you start doing something funny in blackjack or roulette or whatever,
yeah.
They're going to have a problem, because if you're winning, the casino is losing money. But in poker, if you're winning, the other players are just losing money. The casino is not affected. So that's why they'll hold these grand tournaments and whatnot, and they're fine with it. They're like, yeah, take this prize money and enjoy. But that's one of the key conditions. Obviously, I'm not talking about poker that is played against the house, but in general, that is the same scenario with binary option brokerages. So there are really three types of brokerages. There's basically what we call the bucket shops. And the bucket shops are basically, they say, come on in, put your money in, go trade, have fun, and they're counting on you losing, and they're usually right. And in some cases, they'll even use price manipulation and other tricks like that. They're absolutely scummy kind of places. And if you start winning, then they will just say, oh, we don't have your documents, or we have problems with you, or whatever, and then they just won't pay you. So that's the first problem. The second problem is the regulation itself. Okay, so the second is the type of broker. That's a regulated broker. And when we're talking about regulations, okay, so when we're talking about a regulated broker, let me change this color a little bit to something readable. There are multiple different types of regulations, but a common one is SciSec. And you will see these people are like, oh, they'll flaunt it. We are SciSec certified. Well, that really doesn't mean a whole lot, because the SciSec certification just means that funds are kept separate and a couple other things like that. They're now trying to enforce some new things, but this makes you very susceptible. Like they would offer bonuses and say, get this bonus, and then you're kind of locked into this little contract with them where you can't withdraw your money until you have traded a certain amount. Why would they give you that contract? There's a very simple reason. And again, you find the same thing happen with online casinos. The reason the broker gives you a bonus and then says you just need to trade 30 times of this, what they're trying to say is, if we give you $1,000 in bonus, okay, because you put in $1,000 of your own, so now you have $2,000 to trade with. And then they will put a restriction. They'll say you need to trade 40 times of the bonus to make it your own, to be able to withdraw. And that basically comes to $40,000. Well, their intrinsic meter, their internal metrics show them that a person who trades $40,000 will usually lose money, not gain money, on a $1,000 account. And that's why they're so happy to do that with you. And that's the little problem over there, and why a lot of people don't see that happening. And a lot of these bad affiliates are okay with doing that. They'll gladly refer you there because they get hefty CPA bonuses. In fact, in some of these scenarios, the broker will give something like $250 to $350 in CPA commission, like right off the gate. They're not even waiting to be profitable. They go, oh, here's your $250 for referring this guy, because they know that the remaining $750 is coming into their pocket at some point or another. That's the other little problem that people don't want to think about, that this guy is offering you free signals, or they're offering you free whatever, because this is where they're getting their money from. So that's the one. And the third type of brokers are they're in two smaller subsets really. There's the insurance brokers, or the insured brokers, who at least claim that they have a liquidity provider in the background, where they are actually are being compensated when the person is taking a trade. Okay, so when you are trading, when you take a trade, then the broker makes money. It's not dependent on you losing. So that's the situation with insured brokers, and that's at least what they claim. It's very hard to actually track this down and prove it. But I have been able to speak with certain brokers. They've been able to give us this in writing instead of just on a phone call or something. They actually put in writing that yes, we actually have liquidity providers. Yes, we actually do receive. We make money when the user is taking trades, not when a user is losing trades, things like that. And then finally, we have the truly regulated brokers. And what these guys do is they basically make sure that every trade taken in the entire platform is against another trader. So if I'm going to go open a trade, it has to be against either the liquidity provider or it has to be against another trader on there. Otherwise, it won't let me take the trade. Okay, just make sure that there's actual liquidity available for those trades to happen. So this is the rarest kind, obviously, as you can imagine. We've been able to find 2 or 3 of these, and then we actually put money into them. We withdraw money from them. We go in with different names to just check out how they behave with their users. We do all sorts of different things to make sure that they treat people correctly. And if you're in the US, then the only one that's regulated in the US right now is Nadex. There's a couple others that are coming out, but primarily the only one right now is Nadex. And that's the one that we recommend for all US members. We're like, this is where you go. Now, you still have the option of going to other places. There are other different brokers out there, and you can go to them. And we do offer some very exclusive bonuses for members in the sense of, risk-free trading or withdrawals being available, stuff like that. But there is an inherent risk to those brokers, like I explained earlier, that if they don't have good liquidity providers, if they don't have all of this stuff in place, then they can go bankrupt in a couple of days. Because if we send 10,000 traders to them and we have a good day, right? We have a good day where everybody comes out in general, everybody takes our signals and they come out 20% ahead. Now, let's say we send 10,000 traders, they all put in $1,000 each on average. That's $10 million. And they just suddenly came up 20% up in 2 days. That's $2 million. Now, that's $2 million of liability for a broker that might not be able to handle it. So you have to make sure the brokers have enough on the balance sheet, they have enough liquidity themselves, and things like that. So that's the whole test that you run everybody through. So we actually found a few, and the few that we found, we are able to work out deals with some of them where we actually told them to roll any CPA commission we would have received. We actually had them roll some of the CPA commission into some bonuses for the member, for the actual trader. And with some of them, we don't even have an affiliate relationship at all. We just recommend them because we found these things about them to be true. And the reason we don't do that is because we don't want our members to think that we are making money when they lose, which is unfortunately the case with a lot of these signal providers and things like that. There was a very famous case in the end of 2014. This guy came out with this auto trader, and he was like, oh, you just make a donation to a charity and you can have my auto trader for free. But once you did that, then you would get the auto trader, and then he would force you to sign up to one of the brokers through the auto trader. It would only work if you actually signed up to a broker through his system. So that's where he was making money. And then the auto trader was actually rigged to make sure that you lost, because that was the only way a broker would work with you, right? Because the broker is like, oh, you're going to bring 5,000 traders into us? Great, but we're not going to work with you because we'll go broke if 5,000 traders come in and they all win. So they actually rig up the whole thing to make sure that the traders will actually lose. Nobody in that entire thing made money except for this guy, and he walked away with, hundreds of thousands of dollars in CPA commissions.
Wow.
So that's the whole danger behind this, and why we've spent so much time and so much money, like I mentioned even in that email to one particular place, that we have a portfolio of about $3 million that we have spread out in all these different brokers, all these different managed accounts, different places, different investments, to test them out before we would ever recommend them to our members. And most people don't do that. Most people don't even think about doing that. Or even if they thought about it, they couldn't, right? Because they are too busy making money, selling this stuff. They don't have money to actually invest themselves. So that's kind of the background of what we have done. Hopefully we have kind of done all the due diligence anybody possibly could, and our members will be very safe and very happy. But this is a problem. I mean, this is a problem that is being addressed, and I think will go away over time, but it exists right now. So there's that. What else? Do you guys have any more questions?
Yeah, thank you for covering all that. That makes a lot of sense. The other question that you brought up during the back testing is getting signals on time, and I know there's different types of signals. One of the problems, like Sean was saying, with the EOD signals is that, you get one and it's never at the right price. Do you guys have something in place for EOD signals?
Yes. It's okay. So first of all, when you actually get the regular signals, whenever you get any regular signals, here, let me log in here. So all the regular signals like end of the hour signal or a 15-minute signal or so on, they are actually all pretty, I mean, you take it right away. We actually issue it at the strike price, okay? So you won't have that issue with those. But you are right that when we issue end of the day trades, then they're usually issued based on their support and resistance levels and a few different things like that. And so you won't necessarily see the same, you don't actually see that strike price immediately. So you do sometimes need to spend a lot of time just waiting for that signal to hit that price. So what we did here is we have the system in place where you can actually click on set a reminder for EOD trades. Okay, we also call it option mine. You can set this up separately if you want. So what you would do is, let's say that we had issued a signal saying that coffee or gold is going to be below 1169.75. Okay, just purely giving an example. You can actually submit that, and then what will happen is you can go about your business. When we actually hit that price, when gold actually hits that price, then it will automatically email you. You'll get a notification on your phone. If you have the app activated, you will get a notification within your back office, and basically all of these things will happen at the same time. And then you can come in and you can actually take the trade instead of sitting around and staring at charts for the next 5 hours or 6 hours.
Yeah, that's awesome.
That's awesome. Okay, sweet. That covers that. Let me see. I have a couple things I wrote down here. Okay, so you covered Nadex. The other question was, I know that you were in the original webinar you were talking about how it goes beyond binary options, and we don't have to spend a lot of time on this because I know it's in the future, but something about me is I've been trading futures for 4 years, and that's something that I'm super interested in the future. Is that something that you guys are going to be rolling out inside of options eventually?
Yes, we actually have at this moment a lot of trading going on ourselves. We actually have a few tens of thousands of dollars in oil trading running right now. We have similar in Forex and things like that. And we are doing the exact same process for that as well. We actually keep going further back in time, and we continue to run back tests and develop our EAs and develop our systems to basically make sure that we are actually consistently winning in the long run. I would actually love to pull up one of my reports. Let me see if I actually have it available here. But we actually have some reports where we have $500 turns into $20,000 in a couple of months and stuff like that. Those are not realistic. Those are because you have a strategy that works extremely well in those 2 or 3 months, or something happened with oil that made it work so well over those 2 or 3 months. So we have to actually do a lot more back testing and things like that. And it's one of those fields that we're extremely interested in because you'll make far more money. In my opinion, you can make far more money doing that than you can in binary options. Okay, it's the same progress that we've had in DST. You are going to make more money eventually from that side of the market, and in true market trading than you're going to make from binary options. There's like this inherent cap. Think of it like eBay listings. There is a cap there, and you can keep getting it lifted and lifted and lifted, and you can get 5,000, 10,000 listings. But eventually you realize that you could make far more money on the other side, right? So you leave this thing running. It's not that you stop doing this. You keep this running, but then you also go in and you can just start trading in the real markets. And not only can you actually trade yourself, but we'll actually be making our EAs available to you, so you can actually trade automatically, or you can actually put money into a managed account and allow our traders to trade it for you. And that way you don't have to even think about it, and it's just managed for you. And even on top of that, we actually are going to be running these basically buckets, kind of like funding situations, where you can put some funds in and you can select. You can say, I want this to be invested in a low profile or in a low risk low reward kind of setting because I'm not looking to make money off of this. I just want to keep my money safe. I just want to multiply over time. Kind of like, how people put money in Roth IRAs and stuff like that. Just a lot better than that, because you could, for example, put, just purely hypothetically, you could put $100,000 in to a very low risk thing that generates, let's say, 10% a year. Okay, I'm just giving hypotheticals right now. But let's say that it was generating 10%. Now you have a $10,000 a year income coming in from interest, right? So that's the idea behind that, and that's what legacy is. Legacy is something you can leave for your future generations. So the idea is that you do all of the stuff, you run your e-commerce business with DST, then you run your, then you get into binary options, you make your quick money over there, you use that money to fund your more aggressive, in the sense that they're not true investments, they're market trades, but it's more aggressive. You can potentially generate, 50, 60% over the year. A lot of people do that. Not promising that, but it does happen. And you can take that and put that money then, let's say by the end of your life, from all of the above combined, and your affiliate income stream and your matrices and all that stuff, and the future stuff that Domination brand is going to be coming out with, you put that all into your wealth protection asset system. And the idea is, even if you're generating just 10% a year, at the end of 20 years, when you have, compounded that money and you have also added more money over time, you actually have something that you can live off of very comfortably. That's the position that I am in right now. That's the position that Jason Rose, who's the owner of Options, he's in that position as well. We have investments right now in situations like that. These are not trading accounts. No money is being traded. It's actually extremely safe. So probably, it's as close to safety as you can get in many ways. And we are generating enough in interest that we know that if anything happened to us, our families would be completely fine because they have enough coming in interest. And that's kind of the idea, that should be your aim, right? To leave something for your future generations, and that's the whole circle. That you begin in inheritance, you end with a legacy, which becomes inheritance for your future generations, and that's kind of the loop little thing. And you use the inheritance to develop an enterprise, which would be your e-commerce business as well as your trading stuff that is being run for you even. And that's the whole loop here, if you will.
Okay, gotcha. That makes a lot of sense. And just as you're scrolling through there, I see that there's some stuff on there that says live trading. That's something we didn't cover yet. I remember you mentioning something about live trading sessions. Can you go over that?
Yes, absolutely. So like I mentioned before, we actually have traders who are working with us, who are either contracted to us, or they're part of our team, or they are a part of Options Domination itself. There's all these different levels of I guess agreements or working relationships that we have with them, and we have a few of them who actually will run live trading sessions with our members. And what happens with the live trading session is it's actually a pretty cool little thing. So inheritance members don't actually have live trading sessions. You actually get a fixed number of credits every month that you can turn in for a session. Okay, you can buy more credits if you want more sessions and so on, or you can actually transfer these sessions to somebody else. So you could, for example, give that to your brother and say, here, attend this session, take the trades, and you will see that it works really well. So on this particular live trading service, the particular trader that is going to be the primary trader, who will trade about 80% of the time on here with everyone, is averaging a little over 70% over the last 8 months of data. So we have long-term data. We have seen the results. And one of the good things is that this person will say sometimes, okay, it looks like we have 2 trades and that's it, because the market is very choppy right now or whatever. And they are able to, this live trading session is, for one, very exciting because people get to trade right then and there. They get to see it. It's a fixed time. You can basically say, I'm going to trade for 45 minutes every day, and this is the time I'm going to trade. And this also incentivizes our enterprise and legacy members, because you can buy access to our trading session for $15 each. But if you're an enterprise member, then you already get 7 sessions per month. And if you're a legacy member, you get 18 sessions every single month. So it's like if you look at the cost of it, you already get more in enterprise just in the training sessions, not counting the extra training and the extra stuff and the extra matrix and the extra earnings and the extra signals, not counting all of that stuff. You actually already get more than the fair value from these 7 trading sessions that you get. And then the same thing at legacy level, because that's 18 times 15. I think that's 270. Again, you're getting the fair value just from there already. And like I said, the good thing is that you have the ability to actually share this with other members on your team, with other members who are in your downline, with personal contacts, things like that. So you can actually give them a session and say, here, attend this session. You will see how great this is. And then join me at enterprise level or join me at legacy level, or whatever. That's up to you. I mean, you can use it as a marketing angle, or you can use it purely because it's a good thing, and you should be sharing it. But that's something that the live trading system does.
That's really cool. That's actually a really cool bonus that we could offer to new members or people already in the system looking for an upgrade. I know people love the live trading rooms, so that's a really cool feature that you guys added in.
Yeah, that's awesome. Okay, that's cool. So we covered live trading. Let me see. I guess the last thing that I want to go over is, there was a little bit of skepticism about, I guess, where signals are coming from and things like that. And, I just wanted to clear up with you and everybody that's listening to this webinar. You guys are generating your own signals. You're doing all of your own things like that. We covered all that stuff. I guess I just wanted to bring that up and
no, absolutely. So first of all, let me give you some context to this. Understand that we haven't even launched, we haven't even made the whole system live, and we're already the 800-pound gorilla in this niche, right? There's almost nobody of our size already. So what do you think goes through the minds of the average signal service provider when they see somebody of our size, our reputation coming in? They kind of worry, right? They worry that most of their members are already getting average results at best, and they're like, these people are going to come out and they're going to take over. At the same time, they see this as a great opportunity because they're like, oh, they haven't launched yet, they have a name, we can target their keywords, we will target the options domination name, we can do whatever we want to try and get more attention to ourselves. And again, keep in mind, it's the scale of things. For some of these people, being able to get 200, 300 members, 500 members by lying about stuff or by getting attention to themselves is like a life changer. They've never seen that kind of money. They've never seen that kind of membership levels. So they will go out and attack. Same thing happened with DS Domination, right? We launched DS Domination. Once the buzz came out about DS Domination, suddenly everybody and their mother was an eBay trainer. Everybody suddenly had an eBay course. And they're like, oh, we can teach you how to sell on eBay. And you're like, well, where were you a month ago? Where were you 5 months ago? Where were you a year ago? So we announced Options Domination back in June. And then suddenly, right after that, there was this excitement that started spreading about it. And all these people start trying to cash in. They start cropping up. They're like, oh, this is, we can get in here and whatnot. And so this one particular service, they provide signals. And I really liked their display. They had a very nice display for their signals. They had a little beep that went off, and it told you that there was a signal that went. And I was like, oh, this is a nice little system. So we were putting a similar kind of table in our Options Domination members area. Now keep in mind, this is a members area that nobody has paid for. It is not live. Nobody can pay for it. It's like just completely a testing ecosystem. Okay, that's all it is. This guy somehow goes into our testing site. And this is the absurd part of it. I actually have this in our Skype conversation because I asked him, I said, how did you get into our test site? And he says, literally types out, ha ha, you tell me. Okay, what does that mean? So he goes into a testing site, which is not live, that nobody else is allowed, nobody else is seeing, takes screenshots from there, basically claiming that look, they're copying my signals. Now, this was the absurd part, that I'm actually going to, here's the invasion of privacy stuff right here. I'm actually going into my account. You guys can actually see this is my email account. Now, I had actually tested out the service back in December. And I actually wrote them an email because I had such horrible results with them. So you can actually see the email that I wrote them. I said, strike prices on signals are not valid. You can see it's from me. I've been trading binary. And you can see I told them, I was like, look, I have a portfolio exceeding $3 million. I'm not a newbie. I totally know what's going on here. You have tons of examples that are counted as wins on the site. The strike price was never available at the broker. This is just one example. I gave them a specific example. And what is going on here? Are we supposed to wait until the strike price is reached, or do we take the trade the moment the signal is provided? How are you supposed to trade these to get the win rates that you guys claim? And they wrote me back, and they basically said, this is the gist of it, that different data feeds happen, which I get it. There's different data feeds out there, and sometimes there's slight mismatches in price. But if the signal system shows a 10-minute expiry, but the entry isn't good at the start, you could watch for a better entry around. Okay, right there. Stop for a second. You are telling me that I need to figure out what a good entry is, which is totally subjective, mind you. It's completely subjective. The purpose of a signaling service is to tell me what is a good entry and a good exit. Yeah. But I need to just kind of magically divine that from looking at this table. Okay, if I'm supposed to do that, then you should put in results not applicable. You should not be saying win, right? So this was the weirdest part to me, because I was like, okay, it'd be one thing if this guy had really good results and I was like, man, you have really good results. Can I copy your stuff? That would be one thing. I have documented confirmation from we have exchange of emails. I've told him your results are bad. I mean, this is a lie. If I wanted to steal signals, right? If I didn't have this whole system, you guys didn't actually see me do all of this stuff. But let's say that I actually wanted to steal signals. Why would I go to the guy who I already told that his signals are bad? What sense does that make at all? It's like going to somebody and going to a jewelry store and saying, I know that all your gold here is fake and it's worth nothing, and then trying to break into that store to steal it. I mean, doesn't make any sense. So the weird thing was, I actually told him that. I actually told him, even once he put out this little thing saying, oh, options domination is stealing my signals, poor me, I'm the victim here, try to get attention to himself. I actually contacted him, and it was a really bad time for me too. We had to push the options domination launch because of the situation with my son, and I was like, hey, look, I'm really not in a very good place right now. This is like the worst timing for me to be having this conversation. But this is what happened. This was a testing area. We had a table that showed your signals because we really liked the look of your table, and we were working on making a similar table. And not only it was